Good morning, folks, and welcome to another one of my videos. I have two pairs on watch today. Those are Euro Dollar and Euro Pound. Just to say that I managed to get one of my entries yesterday on Euro Kiwi, and I was tagged out of that trade for plus 1.69%, I believe. So I'm going to break that trade down for you now. I'm going to give you a little trade recap on that, and then talk about what I'll be looking for today from the other two pairs. So Euro Kiwi, why was I looking for the trade which I placed yesterday? I was looking for this trade because, as I said, we had this 1, 2, 3, this completed three-touch structure which tapped into this area of liquidity here, this sharp area of liquidity, sharp move up, sharp move down. That gives me a clue that there are likely orders in this area. We tap into those orders, we push down. Okay, so there's no reason for price to come all the way back up to this area because of this completed structure. We then push down and then we correct sideways for a very long period of time. Okay, this is non-progressive price action. Okay, so we come close to this area. We come close to it by way of this wick here, and we push down. And when we do that, it's often the case that we will scoot back up. We will find our way back up to this area to take out the liquidity that is sat there before we see the bigger moves to the downside. And one of the clues for me that that was likely the case is the fact that we had this one. You can see it even on the weekly chart. We have this 1, 2, 3 touch structure which taps into that area. So this is non-progressive price action. Okay, when we see non-progressive price action leading up to an area of liquidity, particularly a sharp one like this which sold off aggressively last time around, bearing in mind that this is the weekly chart, that gives me a clue that we can be looking for more downside. You might be thinking to yourself, if you've not watched my videos before, yes, but surely when we broke above, resistance becomes support. Well, that's partly why we don't trade support and resistance. We look at how price breaks something as opposed to whether it's broken something. And you can see by way of this structure, which took a long time to form, we broke this what was supposedly resistance in a very non-progressive way. We didn't break above it impulsively and then correct. We broke above it structurally. So this gives me a clue that this, as I just drill down, is likely people being caught the wrong side of the market, as we say. And one of the reasons that happens is obviously people see this move going and going and going, and they fear it's going without them, particularly if they believe that resistance becomes support once it's broken above. And as I said in my other videos, the previous videos I've made, the brokers put out things saying, they put out little news ticker feeds saying things like Euro Kiwi at 3-year high, but as soon as it breaks above, because they want to encourage you to buy the highs, because they know that, just think about that from a business perspective. If you keep buying stuff at high prices and you sell stuff at low prices, which is what a lot of people do out of fear, you're not going to be very profitable. So one of the clues for me that this likely was people being caught the wrong side of the market is the fact that once again we had this 1, 2, 3 touch structure. And then what happens? We push down aggressively. So once I see this, I'm not thinking to myself, oh, we're going to the moon now, like many people were. I saw this piece of structure here that broke above that liquidity point, which I just showed you. Look at this. That's exhaustive price action. Look how corrective that move up is. And I believe that on the 15-minute chart, there's another little 1, 2, 3 in there. So this is squeezing and squeezing, prices exhausting. And then we see an aggressive move down. I'm now looking at the sequence because so that I can, get the so that I can determine how reliable the structure that I'm trading in is. Okay, so we get the move down, the first correction. This is more visible on the 5-minute chart rather, but we get these tight corrections, which is typically the banks stacking the orders. We get the push down correction, push down, slightly larger tight correction, and push down, another tight correction, and then we go into a larger correction. This is a very large correction, it has to be said. So this is not the greatest sequence in the world, but you have to also remember which currency pair you're trading. And Euro Kiwi does have a tendency to form very large corrections. The corrective pairs such as CAD Swiss, Euro Pound, Aussie Kiwi, they do tend to form these structures which are a little bit wider than we might anticipate when we're anticipating a larger flag than we would expect to see on things like euro dollar, for example, just to quote one of the obvious ones. But nevertheless, we have a nice sequence, as I say, slightly larger than we would prefer, but the market doesn't care what you prefer. So, as I said, we kind of had this 1, 2, 3, which tapped into this area. But then what happened afterwards? We scoop up for a double top. We then move down, and then we push up very aggressively before moving down again. This alone gives me a clue that there was not enough liquidity at this point here, as does the fact that when we push down from there, we scoop back up. We also, just to touch on it, broke above that. When we break above a little inflection point such as this by quite some distance, that gives me a clue that there was not enough liquidity here to send price to the downside, as opposed to if we just sort of broke above. There's a difference between catching people the wrong side of the market and, breaking above little inflection points, little liquidity points such as this, which is a different story altogether. So we push down, we scoop back up. That alone tells me that there's not enough liquidity here, as does the fact that we're moving in a kind of swinging manner. And then that gives me a clue that we'll likely form a middle section to push back up. So when we don't push down from this area with any conviction, when I'm not convinced that there's enough liquidity there to send price to the downside, the next thing I ask myself, well, where is the liquidity? So one of the things I was doing, I was looking for the next inflection point, and the next inflection point, as I saw it, was this little correction here. That was likely where the orders were, which were pulling price up as people were trying to sell it. So what happens? We tap into that area, and then we push down. Okay, so, and we also tap into the back end of this, so there was likely orders sat just above the base of this correction there, and then we push down. So when we push down, we broke above in the form of a 1, 2, 3. We had that the second touch. This is kind of one touch, but this second touch, which kind of near missed this, as I've talked about previously, that happens a lot. And then the third touch taps into that area, and then we push down. So when we push down, I had my structure drawn like this. We had that 1, 2, 3 move. We have that corrective move down there, giving me a clue that the stop orders and the limit orders are sat just above there. So we tapped into that area. I had my stop loss slightly wider than normal because this is Euro Kiwi after all. The spread can be a little bit wider, as you can see up there. And I wanted to give this a bit of room to breathe because it can be quite wicky. So after the close of this candle here, that gave me a clue that we tapped the limit orders, which was sat above there. We had this 1, 2, 3. And I believe on the 5-minute chart, we even had you can see we even had so we had a 1, 2, 3 and a 1, 2, 3 within a potential 1, 2, 3. So these patterns that we look for are fractal. So I got short after the close of this candle here, slightly lower than I would have liked, but still a valid risk entry. So I got short here within the flag, stop loss above there, and then we impulsed down pretty much immediately. So, and then we formed another correction. I'm now managing this, as is my rules, on the 1 hour chart. So when this candle closed, I moved my stop loss to break even. And one of the things that I like to do is I like to add on a few pips to the break even. So not quite break even, I add on a few pips. And one of the reasons I do that is to offset things like financing, overnight financing fees, and the fact that when you take a break even, a lot of the time, of course, this was not a break even, but when you take a break even, you often don't get filled at the exact price. So if you add up all your break evens, you'll find that you've probably taken a small loss on a lot of them. So what I do is when I move to break even, is I add on a few pips just to offset that little small amount of slippage and the overnight financing fees. And then so we corrected here. I'm at break even now. We pushed down aggressively. When we moved down to here, when this 1 hour candle closed, I moved my stop loss to the break of this correction. I've just cut through the wicks just because that makes sense structurally. We have that 1, 2, 3. This is I don't really get involved in these wiki flags, which is why I stayed out, because I've found them to be quite problematic. But if I had got short on the break of this flag, I would have had my entry just under here. So when I have, if that's the case, that's where I then move my stop loss. If we get a piece of structure like that, we moved down, we moved up, and my thinking was that if we retrace 50%, I gave it a little bit of room to retest the back end of this area. But if we retrace, let's say we just measure this, if we retrace kind of, where are we, more than 60% of this move, then we're likely forming something like this. And I wouldn't want to sit through that anyway, because if that's the case, we're likely forming a middle section to push back up. So I moved my stop loss to break even. I narrowly stayed in, and then I was taken out by this wick, and price moved down. As I say, I'm not really interested in this now, not today anyway, because if this is going to continue to push lower, it will likely form something like this. When I'm looking at these corrections, I'm also looking at the size of this impulse and the proportions of the correction that I would want to get involved in, relative to that move down. And you can see, if you look at the time at the bottom of the screen, that would not be ready what I would be looking for by the end of today. This is a daily forecast. This is a daily video. I'm interested in what's happening when I make my forecasts for that day. And when we push up aggressively like this, that's often the case that we will push sideways. We will form a larger correction. So that was me tagged out for 1.69%, as you can see there. And there is also the possibility, if you look at how we've pushed up, that we could be forming something like this to push higher, because we have come from a move up. We could be pushing higher, and this could be the 1, 2, 3 touch structure. However, the reason I'm not interested in getting long, if we just measure, it might be easier if I just flip this. If we just measured the impulses, so I've just flipped the chart upside down. If we just measure the impulses, I wouldn't be interested in this, because if we were getting long, I'm just going to flip that back upside down. The second impulse, so we have the impulse correction continuation. If this then is a impulse correction continuation to get long, the second impulse within an impulse correction continuation is usually of a similar length to the first, which would take us down to this inflection point here. Also, if we just measure this middle section and assume that it would be of a similar length, so we take it on the break, that also lines up with that inflection point there. So in my opinion, it would be risky if you were trying to get long here, because you could be easily tagged in and tagged out, and then price finds its way down to here before that moves to the upside. So I wouldn't be interested in that either, because I couldn't see how that would be ready by the end of the day. But that is my trade recap on Euro Kiwi. So I'm going to move on, because I've spent a bit longer on that than I wanted to. So let's look at Euro Dollar. Euro Dollar on the higher time frames. Let's just speed up ever so slightly. On the higher time frames, I'm looking to get long, potentially. We have a 1, 2, 3, which taps into the last area of consolidation. It then pushes up. We're then looking for impulse correction continuation to push higher, but that doesn't mean that we can't capitalize on shorter term moves in the meantime, particularly when we tap into an area of liquidity by way of that 1, 2, 3 touch structure, and then we push down and we have a near miss to there and a near miss to there. And as I said, often these near misses get filled. So I'm looking at the sequence, just going to speed up ever so slightly. So the next thing I ask myself, am I positioned well? Yes, I'm positioned well. If you remember in yesterday's video or the day before, I said that I'd be looking for price to tap into this area. We've had the tight correction into a slightly larger correction, tighter correction, larger correction, tighter correction, larger. It's moving quite correctively, but it's moving in sequence. So it was my opinion that when we pushed up here, we would likely tap into this area and push down, which we did. So the positioning's good, the sequence is good. One of the clues for me that we would push lower is that the last leg we had this very deliberate 1, 2, 3 last leg which tapped into this area, which gave me a clue that this was a completed structure. I said I wasn't concerned by this because I thought this was likely just low momentum Asian session liquidity, as you can see from the times. So now I'm looking at the sequence of this. This is just kind of low liquidity Asian session liquidity, but then we have the push down tight flag, which is more visible on the 15-minute, slightly larger tight flag. I wasn't really interested in this trading. This is not proportionate to this move down. This is not a trade that I was actually interested in, because it's not really, in my opinion, this is a higher risk trade just because of the length of this impulse down relative to this. So what I'll be looking for, and this may not be ready by the end of the day, there's some pairs that look like they need a bit of time to develop. What I'll be looking for is, where's that gone? Okay, right, there we go. It wasn't in the right box. There we go. I'll be looking for something like this, so we can kind of separate the structures. We can, if we just go to the 5-minute chart, you can see that little tight correction there, followed by that correction. So that gives me a clue that this is a separate piece of its own. And if we got something like this, because I'm looking once again at the proportions of the move down, if we got something like this and a 1, 2, 3 which tapped into this area, which is more visible on the 15-minute chart, this little hook point there, then I would look to get short with a risk entry, and I'd be able to manage this down to the bottom of the structure for 2.42, and then down to the bottom of here for 7.5%, and then obviously the higher time frame target would apply. But that is euro dollar. As I say, if you look at the time at the bottom of the screen, this likely wouldn't be ready by the end of the day, but just having it on watch, just because there's other things are not shaping up. That is euro dollar. Let's look at euro pound ever so quickly, because we are fast running out of time. So euro dollar, just looking at this, we have this 1, 2, 3 move which taps into this area of liquidity. We then push up, and now just looking for that impulse correction continuation. I'm just going to flip the chart upside down because it might make it a little bit easier to analyze the structures. Again, now I'm looking at, am I positioned well? Okay, am I positioned well? Yeah, the positioning looks good within this for a potential move down to this, what we call the 90% rule. What's the sequence like? This is euro pound. You do have to remember that this is quite a messy pair. We have a correction there which is more visible on the 5-minute. Then we go into a slightly larger tight correction, this larger 1-hour flag, tighter correction, larger correction, and then these larger structures which we typically see about halfway within a piece of structure such as this. So we see these larger corrections. So what I'll be looking for in this one, it looks like we may be forming a little 1, 2, 3 to tap into this area, but because we've gone from a correction into another correction which doesn't actually meet up with this trend line, what I'm going to be looking for is price to just tap into this little liquidity point there, which you can see on the 15-minute chart, this sharp move up which happened on the break of all of retested the back end of all of this volume. These tend to be quite reliable. There tends to be a lot of liquidity there. So what I'll be looking for, and because of this structure isn't very clean, I'm going to flip the charts back upside down now. What I'll be looking for is the following: if we tap into this area and we push up and we clear this little piece of structure, this little potential little ending structure that may be forming, if we tap into this area, take out all the limit orders, and then push up above this and we flag, I will then look to get long, and this may be ready by the end of the day, but I'll be looking to get long either on the break of the flag or within it, and then I'll be able to manage this up to this first inflection point for something in the region of 3.6. And then, of course, the higher target applies, which would be something in the region of 13%. But that is it, folks. I've got an alert set at the area of value. I hope you're taking some value from this. I bid you a great weekend, and I will be back next week with another video and more videos. Thanks for watching.